I think to explain what a TPA, it's best first to understand what these plans are, these retirement plans. They're basically tax qualified plans. And the reason why we call them tax qualified is because you're able to actually receive a tax deduction for contributing to them. The employee receives a tax deduction on their W-2. The employer receives a tax deduction if they contribute monies to the employees. But in order to have a tax qualified plan, there's a lot of compliance duties that have to be followed, a lot of rules and regulations. And basically, the Department of Labor says that the business or the employer is the plan administrator. Legally, the company is the plan administrator. But because we have to answer to the IRS, who oversees all of the deductibility, basically how much we're allowed to contribute to these plans, and then the Department of Labor oversees all the non-discrimination rules, basically meaning if I allocate this much to the owner, how much am I required by law to give to my staff? Because there's so much rules and regulations regarding these plans, you outsource these compliance duties to a third party plan administrator. So similarly to how a company would hire you, Craig, to handle their business tax return, they could certainly try to do it themselves, but that's not really recommended. You hire a third-party plan administrator to handle all of the compliance and tax filings associated with a retirement plan. It used to be that CPA firms actually many, many years ago were the ones that were doing these compliance duties for 401k plans. But basically what happened is that the rules started changing so much, and it's still the government legislation and rules and regulations change almost daily sometimes with these plans, that a lot of CPA firms realized they weren't going to be able to really specialize in this. And so that's all we do is retirement plan compliance.